All right, everybody. Good afternoon. Welcome to today's webinar, How to Blend Fundamental Valuation with the Insights of Technical Analysis. Before I officially kick things off, just want to make sure my sound and audio are coming through. I want to welcome everybody joining me via GoToWebinar. There we go. Gary says okay. I want to join you folks. Thank you, folks, for joining us via YouTube as well. Thank you, Kenneth. Awesome, Jim. Welcome, Don. So good afternoon, everybody. Right here, noon on the East Coast, where we're getting pummeled with some rain. Pretty cold out there. If you guys live on the East Coast, you're seeing it. Next couple of days, nice, just in time for Thanksgiving. It'll be clear up by Thursday. We do have an abbreviated week this week. Of course, Thursday the market is closed, and it is an abbreviated session on Friday, with the market closing at 1 o'clock. Okay, so before we kick things off, just want to introduce myself. My name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. Always like to introduce you guys to our team. We've grown quite a bit over the years. When I first started with VectorVest 17 years ago, there were maybe one or two folks in the education department. Very small back then. The company has grown over the years, so has our education team. And back then, we only focused, I wouldn't say only, but solely focused primarily on the VectorVest program. Everything and anything that had to do with the VectorVest system of market analysis, or our system of analyzing stocks. We've grown over the years and evolved, I think, because now we understand that not everybody trades or invests the same way. Some folks might want to trade options or are focused on income generating strategies, retirement type strategies. Some like to trade quickly. So swing trading is an entire approach, and we feel like we have you guys covered in terms of the different investment vehicles and portfolios that you're managing. Okay. How's the audio, guys? A few folks are saying they're having issues with the audio. How's the audio on your end? Robert says sound is good. Good, 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 good. A few folks are having issues. I'm sorry about that. It's not universal, so nothing on my end, I don't think. All right, so a lot of you guys are saying good. Okay, so just wanted to welcome you guys and introduce you to the team. Here's what you're going to learn today. You're going to learn the difference between fundamental investors and technical traders. There is a significant difference in their kind of underlying approach on how they attack the stock market. Okay. You're also going to learn what the VectorVest method is of merging the two. And this right here isn't a novel approach. Merging fundamental valuation with technical insights is commonly done by the very best professional traders in the industry. Okay. This part of it, though, can become very time consuming if you don't have the right tools and kind of the right plan in place. Very time consuming. So what we want to do is be able to quickly and easily identify not only the best short-term trades, but the best long-term investments. Very quickly, very easily, we need to be able to do that. Okay? So that's what we're going to learn today. If you guys stick with me to the end, I will share with you a copy of today's slides. I'm going to be in the slides a lot here. There are a number of slides that we'll go through. So if you stick with me to the end, we'll be together for about an hour. I will put a copy of today's slides in the handout section of your GoToMeeting control panel, and I will also email them to you if you are joining us via YouTube. Okay, everybody ready? All right. The two different types of investors. First, there's the fundamental analyst. Okay, the fundamental analyst evaluates stocks to determine their intrinsic value, what the company is currently worth. Now, they know what the market value is, right? They know what the price of the stock is at first glance. Market value is quite different than intrinsic value. right? So you always know by just looking at any stock chart or any any ticker what the current price is. But a fundamental analyst is his or her sole purpose is to evaluate the stock and determine the intrinsic value. Fundamental analysts will look at income statements and earnings reports and balance sheets and cash flow statements. They'll look at current interest rates and inflation, macroeconomic factors. They'll also dive into industry and sector strength, geopolitical factors. Might be something that a fundamental analyst looks at. Again, to determine long-term price appreciation potential, long-term value. Okay? So a stock that is trading below its intrinsic value becomes a promising investment for somebody that's looking to hold for the long term. Opposite is true if the stock is trading. A lot of times, if a stock is trading above its intrinsic value, that might deter that investor from buying that stock. Not always the case, and we'll explain that in a little bit. But these are all the things that a fundamental analyst has to go through to determine whether the stock is a candidate to buy long term. And again, this can become very time consuming. You really need a plan in place, and you really need access to all of these resources. Very, very difficult. Then there's the technical analyst. Okay, technical analysis or technical analyst is quite different. A technical analyst will evaluate a stock or commodity or ETF by studying historical and statistical price and volume information, price and volume data. Okay? Technical analysts believe that price patterns repeat themselves and that all that other fundamental data already baked into the price. It's already baked in. And market sentiment and market psychology and specifically short-term psychology and sentiment drives stock prices. So this type of trader also could spend a lot of time in determining which candidates are promising and which aren't. Okay, there's easier ways to do this. Okay, now, get these two folks in a room, get these two traders or investors in a room, and they will argue till they're blue in the face on who's right. They have, for lack of a better word, fundamental differences in how they attack and approach the stock market. Okay? Both are correct, and being able to, and the whole idea here in blending the two is to leverage the strengths of both approaches to help compensate for the weakness in each's approach. So this is not a novel approach, okay? For example, what you might want to do is kind of determine the intrinsic value of a stock through fundamental valuation, through fundamental analysis, right? This a lot of times does involve looking at financial statements, market trends, other qualitative factors. So you do that work up front, and you are determining, is this a stock that I would consider holding on to for the long term? That's kind of your entry into whether you're going to buy the stock or not. It's going to be through fundamental valuation first. Okay? Then what you're going to do is use technical analysis to help identify precise entry and exit points. It doesn't matter that you plan on holding the stock for a long period of time. Aren't you looking to maximize returns? And sure, if you analyze a stock for its fundamentals and it's strong, company's strong, earnings are growing, uh, they happen to pay a dividend and they continue to raise that dividend. Just a strong, solid company, a stock that's suitable for your retirement portfolio. You still want to maximize returns and not just buy the stock at any old time because the fundamental valuation lines up. So maybe you then apply technical analysis, different types of indicators and price patterns and support levels and moving averages to help identify precise entry and exit points. This does involve studying some charts, patterns, and other indicators. It's a more complete approach, combines fundamental risk assessment, right? You're assessing the fundamental risk of the company with technical analysis, short-term timing. And it can be suitable for short and long-term investments. You know why? Because again, going back to the first situation where, hey, I want to buy this stock for the long term. I want to keep this stock in my retirement portfolio for a while. Love the company, love what they're doing, understand the indicators and what their financial records show. But I want to get I want to get a better price. A little bit of a bargain. I feel it's a little bit overbought right now. A little bit overextended. I see, a couple of moving averages that I'd like the stock to pull back to before I maybe take the investment, buy the stock. So you're applying short-term price analysis to a potential long-term investment, right? So this sounds all great. How do you do it? Well, we'll get into that in a moment. All right. But this is kind of the approach that we want to take. Now, on the other side of things, what's to say that, let's say you got a stock XYZ in your retirement portfolio. Man, you've had it for years. It's a great company. The company continues to get stronger and stronger. Earnings continue to grow. You got this stock in your long-term portfolio. What's to say that you can't supplement those long-term returns with short-term gains at very specific opportunities? You guys following me? You got the stock in your retirement portfolio. Just because you have it in your retirement portfolio doesn't mean you can't buy it again, right? A retirement portfolio should be a certain capital allocation. Maybe a options portfolio might have a certain asset allocation to it. Then you got your swing trading portfolio. Your swing trading portfolio is stocks that are short-term trades that use primarily technical indicators and technical analysis to identify viable setups. But I'm not going to take a short-term trade on a junk stock, right? I want to increase the probability of that short-term swing trade because my holding period is very short, a couple of days, maybe a few weeks. I want to increase the probability of that trade being successful by making sure that the company is strong and not, again, a junk stock. So this is how, guys, we're blending the two. Okay? So let's start with fundamental evaluation. How about that? So what I said earlier, that it could take a lot of time, right? If you got to go through financial statements and earnings reports and cash flow statements and balance sheets and all of these different financial documents to then come up with an intrinsic value seems a little time inefficient, right? So with VectorVest, of course, a lot of you guys are VectorVest subscribers. Some of you may not be. So what we do every day is we assign a value to every stock in the program. We do all that work for you. We go through all those documents and we get our data from FactSet and different resources. We do all that and we come up with a value. So let me just do this for a second so you can see my pointer at all times. As of just a couple of days ago, so let's go through how you would analyze a stock in VectorVest. Guys, it's really simple. To determine a stock is fundamentally strong or not, it takes but a few seconds. So as of just a couple of days ago, November 13th, you got McKesson Corp. The price as of November 13th was $470.64. We think it's currently worth $634.01. So right off the bat, You know what the intrinsic value of the company is. Again, based on all of that data that we collect and crunch, we did all that work very, 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 very easily. Okay. So right off the bat, all right, I got a promising long-term investment here. If I'm going to buy it for 470 and it's worth 634, so far so good. We have other indicators that also include all of that other fundamental data, financial data that a company reports. Those two indicators are relative value and relative safety. Both of these indicators are on a 0 to 2 scale. Above 1 is good, below 1 is bad. Both are fundamental indicators, and both look at debt to equity ratio, earnings growth, earnings per share, sales volume, price volatility even. And all of that data is put into those two indicators. So I know that McKesson Corp relative value is the upside potential over the next 1 to 3 years, and relative safety is an indicator of risk. I know by a 1.42 score that this stock has tremendous upside value over the next 1 to 3 years. And I know it's a rather safe investment because it's got an RS score of 1.09. Other earnings information that we have here, GRT, earnings growth rate, earnings per share, of course. This is a leading 12-month indicator. Earnings yield, price to earnings PE ratio, growth to PE ratio. The stock also pays a dividend, pretty nice yield, good safety, good growth. YSG is an indicator that combines the dividend yield, safety, growth. It's on a 0 to 2 scale. Above 1 is good, below 1 is bad. This is a dividend paying stock. That is a safe dividend paying stock, meaning that they have a strong likelihood to continue to pay that dividend at the current or higher rate for the foreseeable future. And you know why? It's because they have strong earnings and they have strong earnings growth. And they're undervalued. It's a solid company. You guys see just quick snapshot. This is a fundamentally sound company. I can, just by looking at the indicators here in two rows, I know that this is a fundamentally sound company. You know how I would know if it wasn't? If the stock was overvalued, if price was above its value, and it didn't have a high RV, it had a low RS, maybe their earnings per share was negative or negligible, poor earnings growth rate, right? Maybe they didn't pay a dividend, they can't afford to. That's not a company that we want to invest in the long term. Okay? So on face value, when you look at these indicators and you see these indicators at these levels, you know you got a strong, fundamentally sound company. All right. Here's a chart of the same stock here from November of 2020 to October of 22. No, I'm sorry, November of 21 to October of 22. So let's look at the hard right edge. So now what I want to do is, everybody with me on determining through fundamental analysis, VectorVest's fundamental analysis, determining whether this stock is suitable for a long-term portfolio and a more longer-term investment. Very, very simple. I know that I could buy McKesson Corp and feel pretty comfortable that they'll continue to grow as a company because that's all they've done. Hard right edge is October of 2022. Let's pay attention to the hard right edge now. Because if I'm looking at this right now as of October of 2022 and I'm saying, okay, great, love it. Earnings per share, bottom left to upper right, relative value high above 1.3, relative safety high at about 1.2, earnings growth rate, nice 20%. Now remember, this was just as a few weeks ago. The numbers all are good. This is as of October of 2022. Numbers are still good. So I'm looking at this as a hard right edge. I'm saying, oh, well, it's a hold rating. All right, it's a hold rating, and it looks like it's just kind of moving sideways, right? I do think I'm getting a good bargain compared to its recent high here. But boy, it's kind of in a little bit of a move lower. It's capitulating here after that down move. I want to wait for a better buying opportunity before I, number one, put this stock in my retirement portfolio. Because if we determine, again, by fundamental analysis that it's suitable for that type of portfolio, then you're of course looking at market conditions first and then determining whether you're going to buy it or not or when you're going to buy it. Here, and now I'm taking off my fundamental analyst hat, taking it off. I've done that already, and I put my trader's hat on. Because now what I'm looking for, what I want to see, well, first, what I do see, not only is the stock capitulating here after a little bit of a pullback, almost a little double top as well, I see that it's landed right in this $340 support zone. Why is it support? Well, it used to be resistance back here. Resistance is where price stops rising and begins to pull down. And that's where supply is deemed strong enough to resist the price of the stock from rising any further. Little hesitation once again here in August of 2022, but for the breakout. Nice breakout above that resistance level. That resistance level now becomes support, and we're seeing our first retests of that support level. Again, we got our traders' hats on. We know it's a fundamentally good company. I'm just looking for a buying opportunity. I would look at the recent high there within this channel, this little mini channel that the stock has been trading in now for a couple of weeks. I would look at that recent high as my buy level. I don't want to buy it yet because you just don't know what price is going to do. Price may break down through support. It's held nicely, but this is kind of your tug of war level. At support and at resistance, there's a tug of war going on between buyers and sellers. At this support level, demand is deemed strong enough to support the stock from from falling any further, but I just want to make sure that it's truly held and that's a strong support zone and price breaks out. That's what I'm looking for. I'm looking to take this trade then on October 4th of 2022 as a short-term swing trade if I see this favorable price and volume setup. Favorable volume setup in that during this channeling period at support, you could see how volume dried up, right? Just visually, you can see the smaller volume bars for the most part. A couple of them were larger, but for the most part during this area, volume dried up. Now you get a pretty good spike in volume there. Nice breakout. That's when I'm going to look to take the trade. And that's also when I'm going to look to buy my long-term holding. Okay? Right above the recent high there. Another indicator that I like to use, and I'm not trying to muddy the waters at all, I'm just going to kind of introduce a couple of technical indicators that you might want to consider using. There's a lot of them, but I love support and resistance, and I love stochastics. The stochastics oscillator on that mini breakout there, or retracement off of support, the stochastics oscillator also crossed from below 20 to above 20. It was previously below 20, indicating a short-term oversold price situation. Okay? So stochastics crossing from below 20 to above 20, good buying opportunity, retracing from support confirms a strong setup. In terms of a swing trade management, I'm going to look at the most recent swing high as a potential profit target. If this is a long-term investment, I'm not going to pay attention to the recent swing high, right? Really doesn't concern me. So if you bought this on October 4th for a long-term investment, the recent swing high here is inconsequential. You're not even going to pay attention to what happens when price reaches that level. You're managing the trade a lot differently. You're using wider stop criteria and more generous profit targets because, again, it's a much longer term investment. You want to try to stay in the investment as long as possible if this is one that you're going to put in your retirement portfolio. If it's a swing trade, I want to get out quick when I see maybe a breakdown and a failure to make a new high. Nice little short-term trade, buying off support, selling off of resistance. The following day, we got confirmation, so you do take the trade. And you might be asking, well, should I have taken that trade or not? Meaning, what was the market doing on October 4th, October 5th of 2022? That is the most important consideration that you want to be making here. Fundamental valuation, fantastic, great. You're looking for precise pinpointing precise entries and exits using technical analysis, fantastic. But you got to have the overall market in your favor before you buy any stock. So going back to October of 2022, you could see a nice break there off of a recent low. The MTI had gone below 0.6, the buy to sell ratio below 0.2. Really big rally there on October 4th with follow through the next day. Okay. So looking at, and again, just reiterating the approach we're taking here, in that if we buy the stock based on its fundamental analysis and plan on holding it for the long time, for a long time, with McKesson Corp, you could have bought this stock for the first time back in May of 2020 when it first got a buy rating and held it ever since. The stock price never closed below its stop price, and we never gave it a sell rating. So those are the type that's kind of the type of strategy that you would look to use with a long-term holding, right? Recommendation equals sell. If the price of the stock goes below our stop price, we give it a sell. I don't care how long you want to hold on to it for. You gotta manage the position accordingly. So rec equals sell. You can always buy it back if it gets a buy, but you're moving on, or at least selling the position when it gets a sell rating. It never got a sell rating over this entire time period from May of 20 all the way to current. So the entry that we're talking about here on October 4th is again one that you can use, or the breakout there on October 4th is one that you can use to supplement those long-term gains that you're achieving holding this position in a retirement portfolio. And we're going to go through all of the different opportunities here that you had to do that. So during this breakout, on this breakout, you got a breakout, you got follow through. Look what happened to the stock next couple of days after we get in. Doesn't that always happen, right? Stock went down for the next couple of days, but look at what it didn't do. It didn't break down through support. So even though you take the trade on the breakout and it kind of softens a little bit for the next couple of days, never broke down below support. You're in the trade the whole time. You look at the most recent resistance level or swing high as a potential profit target, but look at what the stock did. It just completely blasted through that zone, allowing you to stay in. So in a matter of maybe 2 weeks, you're looking at another 8.5% return on a short-term trade. You made that 8.5% on the long-term position, right? You're capturing those gains, but you're supplementing them with shorter-term gains in a different type of portfolio, and more of a swing trading portfolio. Okay, how big is that 8% return in a couple weeks? That's annualized out at 140. I'm not saying you're going to make 140% all the time, every year. Very unlikely, but this is just puts apples to apples, compares apples to apples. Very large gain in a very short period of time. Okay. Bearish candlestick formation. Follow through the next day. Trade is over. Trade is over. You're not selling the stock in your retirement portfolio, right? You're just closing your short-term swing trade. You're capturing those gains. And now you're looking for another attractive situation between price and volume. So what I would love to see is price to pull back and settle back into this support level and retrace from it before I would consider buying it back. Let's see what happened. Right here is what was the hard right edge. So the stock price pulled back a little bit. It did confirm the one black crow, went up for a couple of days after that, but look what happened. Completely fell off the table. Landed in that support zone right here on this big red candle, landed in the support zone, but it never retraced from it. In fact, it crashed through it again and fell back to the support level back at 340. Now you get your retest of that support level, and there's your other buying opportunity. Stochastics during that time also went from below 20 to above 20. So now you're, again, buying the stock back at a lower price, looking at congestion here to sell that short-term trade. So in a situation like this, where maybe your long-term investment isn't bearing returns, because the stock price is moving kind of sideways, right? What you're doing now is you understand that this is a fantastic company. It's a great stock. Fundamental indicators line up. It is suitable for that type of long-term portfolio, but it also strengthens any short-term trade that I'm considering taking because of the underlying strength of the stock. So you're supplementing your returns on that long-term investment by taking these shorter-term gains. Okay? All right, let's take another quick example here. November 13th, just a couple of days ago, United. We all know United, biggest healthcare uh, uh, company in the U.S., pretty much one of them. As of November 13th, got a price of 542.57. We think it's worth 571.33. All right, so it's fairly valued. Price is a little bit under its value. How are the fundamentals of the company? How's RV? How's the long-term upside potential? That's good. Is it a safe or a risky investment? It's a pretty safe investment, 1.29. What's their earnings per share look like? $27.18 a share. They're growing that at 16%. That's an earnings yield of 5% with a dividend yield of 1%. That's good. Earnings yield greater than dividend yield. That's strong. They pay $7.52. 85 dividend safety at 85. Very, very strong. That assures us that they will continue, or that they will likely continue to keep the dividend at the same rate or higher for the foreseeable future, and also growing that dividend at 14% per year. Strong company. This is what fundamental analysis looks like. Guys, it didn't take but maybe a minute or two, right? So the VectorVest edge is that you don't have to go through financial statements and cash flow statements and all of that is required in order for you to determine intrinsic value and long-term upside potential. So going through the same exercise with United as we just did with McKesson Corp. Same exercise. The fundamental, again, taking our fundamental hats off now. We did that work. Didn't take very long, not much work. We do the work. You just have to read the indicators. Great look at stock price, bottom left to upper right. Only got to sell one time here in May of 2022, but stayed above our stop price the whole time. Buy or hold rating the entire time. Hard right edge here is February of 2023. All of our indicators still look good. Earnings growth rate above 15%. Relative safety dipped a little bit, but still at 1.4. Relative value above 1.3. Earnings per share, bottom left to upper right. If that were the hard right edge, would love it. If I would love the stock anywhere in between, because look at where the indicators are through this entire period. So now, this is a stock again that if we bought, back in September of 20, we would have held it the entire time here. Maybe selling it one time when it got a sell, but buying it back when it got a buy rating. This is a long-term retirement portfolio position. We know that because of the, again, fundamental analysis that we just went through. But boy, this stock trades very predictably, doesn't it? This is what technical traders think. This is what they believe. They believe that these zones, these self-fulfilling prophecy zones, aren't coincidences. Okay? It's not a coincidence that the stock's price stops in the same zone multiple times. Right? So here, you finally, during this period, this is a rough period for everybody, right? If you're holding the stock for the long term, you're going from December of 20 through the first quarter, a little bit more of 2021, and you didn't make any money. You didn't make any money. But in April of 2021, you get a breakout above resistance. It's clear, and you had that breakout on high volume. There's your opportunity now to take the trade. There's your bullish signal. Okay, maybe you bought it in your retirement portfolio 5-6 months ago. You got it in your retirement portfolio. In that portfolio, you're finally glad to see nice breakout there after consolidation for quite some time, right? You're finally seeing a nice breakout. But if you got your trader hat on now and you're saying, boy, I love to, you're looking at this stock from November of 20 all the way through March of 2021. He's saying, man, I see this zone. I can't buy this stock before it breaks above this roughly 375 resistance zone. You're negligent if you do that, right? Because what's happened in the past? In the past, recent past, the stock price has failed to break above that level and retrace from it. So a little careless to buy it before the breakout. Now I know if you say, if I would have bought it back here, I would have made money. And yeah, and that was a support retracement. But if you're approaching resistance and you get a little bit of a hesitation there, you wait for the breakout above resistance on good volume before you take the trade. And if you did, you had another opportunity there to buy it, didn't you? So what I'm going to be going through now are all of the short-term trading opportunities that you had to take advantage of to supplement the long-term returns of United in your retirement portfolio. So breakout above resistance, what do we say? That resistance level becomes support. Look what happens. Again, it's not a coincidence that it stopped right in that zone. Retraced off of it. There's your other buying opportunity. Price really fails to break above the recent high with any conviction. It establishes resistance and retraces from it and comes back down, and guess where it stops again? Stops at that support level. Again, used to be resistance, now it's support. It stops at that support level. Stochastics, by the way, both times went from below 20 to above 20. Another good buying opportunity. In your long-term investment, you haven't made any money during this time period, unfortunately. But you were able to take advantage of a few short-term, attractive short-term situations and make it a quick trade. Then what happens after the retracement? You get a breakout. You get a breakout above resistance, which gives you another opportunity to take it if you didn't buy it off of support. And again, it's predictable, guys. This is not a coincidence. After the breakout above support, in this case, you get almost an immediate breakout above resistance. In this case, you get an immediate retest of support, another retracement, and time again, the same phenomenon is occurring. Retests of key support and resistance zones, which give you a tremendous opportunities time and time again for quick trades. You are not exiting, you are not selling this investment in your retirement portfolio. You are reaping the rewards of slow, steady, long-term gains, and that's the whole purpose of an investment, right? It's a marathon, not a sprint. When you're trading, it's a sprint. So you want to get off the blocks quickly. And that's what the insights of technical analysis, they really do for us. They allow us to get out of the blocks quickly, capture short-term significant returns, and move on to other attractive buying opportunities. So the question then becomes, how am I going to find trades? How am I going to find these trading opportunities? I get it. Kind of speaking for you guys. This is what you're thinking. Okay, I understand now. Fundamental valuation first. Is the stock undervalued or overvalued? How's the RV? Good RS? How's their earnings per share? Steadily rising, bottom left to upper right. Growing their earnings every quarter, every year. Strong earnings growth rate, ideally greater than the current sum of interest and inflation. Do they pay a dividend? Even better. Okay, this is your fundamental evaluation. Then you're looking for precise entries into that investment, or precise entry into a short-term trade if you're looking to swing trade the stock. But the probability of making money goes up when you're only investing in the best stocks. I mean, that goes without saying, right? So there's a couple of different ways to do it. There's what we call the one-by-one method. A little time-consuming. You look at any list of stocks. You look at the stock viewer, for example, first. I'm just looking here at the S&P 500, and you go through the analysis. Is the stock undervalued or overvalued? How's the RV? How's the RS? Is it strong VST, earnings growth rate, earnings per share? So you're going through that analysis first on a list of stocks. And you know what? The great thing about a VectorVest watch list, for example, or any VectorVest list of stocks, is that they are ranked best to worst. So when you look at a watch list, it's sorted by VST. VST combines relative value, relative safety, relative timing. You are most likely going to be seeing undervalued stocks. Sometimes the stocks might be overvalued. But if the fundamentals are strong, I don't mind buying an overvalued stock. You might say, you know what? No, that's just a rule that you're going to have, and you're not going to buy an overvalued stock. Align Tech, good company, really good stock. It's a little overvalued here at this time. This is an older chart. By the way, these numbers don't reflect current values. Actually, let's do this. Let's go into the program today, and let's just go into that S&P 500 watch list. Let's take a look. All right, S&P 500, NVIDIA, top stock, a little bit overvalued. We'd say that's fully valued, but tremendous RV. Look at that RV 1.73, RS 1.45. We know it's a safe investment. It's also currently rising in price. It's got a VST strong 1.49, good CI, earnings growth rate at 43%, earnings yield at 3. They do pay a small dividend, very small, but great company. Great company. Best of breed, right? NVIDIA. Then you go through the same analysis on the rest of the stocks. Okay? And again, when you look at a watch list, it's going to sort the list from best to worst. So really, most of the work is going to be, should I buy it now or not? Right? If it's got a buy rating, just because it has a buy rating doesn't mean you run out and buy it, even if the fundamentals are strong. It's got a buy rating, fundamentals are strong, but should I buy it right now? So you're always going to consider market direction. I know the stock market's down a little bit today, but it's been trending up nicely. The trend is still up. Short-term trend up, underlying trend up. We're saying use caution moving forward. Another up day tomorrow. All systems go. We're continuing to move higher. So you always want to consider market direction first. Fundamental analysis with VectorVest is easy. It's just a matter of reading numbers. Okay? Just a matter of reading numbers. Price to value comparison. RV above 1, RS above 1, and when you're looking at a list of top VST stocks, that's what you're going to see for the most part. You're going to see all these. In this case, DHI, a little bit overvalued. Don't love the long-term upside potential with the RV of 0.78, and this is a big reason why, because their earnings growth rate is -5%. Okay? Negative or poor earnings growth will affect the long-term potential of that stock's price. Okay? So I would look to then graph these stocks. And what I'm looking for now is a buying opportunity. Again, let's take our fundamental analyst hat off now. We've done that. Okay? Put our stop price on. Put the recommendation on. It's a buy. It's hitting it, just coming off of a new 52-week high. Is this a trade that I would look to take? Well, first off, is this an opportunity to buy this stock as a long-term investment? I'd say yes. Right now, I'd say I want to wait for another little high. The stock is down a little bit today. It's kind of consolidating a little bit over the last couple of days. Boy, would I love for it to come all the way back to $400, right? So look at all of the buying opportunities, guys, that you had with NVIDIA off of that $400 zone during the last 5 months. 5 months where the stock price didn't really go much of anywhere, although last recent rally has pulled it a little bit higher. But during this time period, the stock price didn't go anywhere. But you had these price retracements back to these zones, or this $400 support zone, where you had time and time again opportunities for short-term gains. Look at the stochastics oscillator. During the, at those support zones, you can see how stochastics went below 20, crossed above 20, there's your buy. Here's your support zone. Stochastics went below 20. You're not buying it yet. You're not buying it yet. You're waiting for it to cross above 20. There's your buying zone. Price rallied again, failed to make a new high. You look to take profits if the stock price pulls back. You look for another buying opportunity if it falls back to 400. It did again. Stochastics goes from below 20 to above 20. There's your recent buy. I would love for it to come back. I don't know if it's going to. Okay. But if I put support and resistance on, how is my line, guys? How is my red line there? Right at support. Resistance was right here at about 478. So maybe I would look for a retracement back to that support zone, wouldn't I? That would make sense. Either a continued breakout move above the recent high there or a retracement back to that 478 support zone. There's my buying opportunity. So what you would have to do, so as of the hard right edge, is it a buying opportunity? No, I think this is a watch list stock. Okay, Jerry says reports earnings tonight. Okay, fantastic. Okay, so let's take a look at that. Again, I wouldn't buy the stock now. There are certain situations that I'd like to see before I would buy it. But let's put earnings on. How do you think they'll report? Throw earnings per share on the bottom of the chart. How do you think they'll report? Probably the same as they've reported time and time again, quarter after quarter, right? Now, market conditions, of course, are going to affect the stock's price. Doesn't mean that the stock is a bad company. You're out most of this time, right? Even if this is a long-term investment, you're out most of this time here, kind of keeping your powder dry. A couple of quick little whipsaws there, but you can see, look, you're probably looking at this stock. Forget our rating, forget our recommendation. You're probably thinking, oh my goodness, I would love to be out most of this time here, right? Okay. Looking at the stock's price, you just know that. I would like to be out of the stock most of this time. Our recommendation got you there. It got you out most of that time here. Okay. Minimizing losses. So again, this is a watch list stock. I'm looking at, okay, so ACGL. I know it's a fundamentally sound company. We did our analysis here. A little bit overvalued. Oh, no, I'm sorry. Hold on. Undervalued, good fundamentals. Everything looks good, right? Earnings growth rate, earnings per share, earnings yield greater than, they don't pay a dividend, okay. But still, great company there. Arch Capital is now the time to buy it. Just kind of moving sideways, maybe kind of pulling away here. I don't like the setup currently. How about Pulte Group? No. I'd love to see a retracement back to 8307, right? So, but it's a watch list stock. Kind of consolidating here with Arista Networks. Salesforce moving higher, but it's approaching resistance, isn't it? Isn't it approaching that resistance level? Boy, I look at this and say, man, it looks good. It's been rising for the last couple of weeks, but it's at a level where price failed 3 times recently. It's not a good buy candidate right now. I'd wait for it to break above that resistance level. Progressive looks like it's breaking out, might be a good one. So this is the one-by-one method, guys, where you have to go through chart after chart and trying to identify setups. Okay, whether they be support retracements or stochastics crossing above 20, or this, again, there's a lot of different indicators to use. You have to learn the indicators. Blending fundamental and technical analysis does require an understanding of both, right? You do need to learn indicators, technical indicators, and understand about support and resistance and moving averages and breakout patterns and different things like that, right? You have to know that stuff. But the one-by-one method is time consuming. Okay? The other method is by using a scan. And let me get back into the slides here because I want to show you something. John, it's the default. John is asking, what are your settings for support and resistance and how many touches? Default. Just whenever you put the support and resistance indicator on the chart, check the box. It's the default. David's asking, how about cash secured puts at support zones? That's just sure, sure. As kind of protection, right? A little insurance if the stock price breaks down. Yeah, yeah, that's viable. Sure. So using a scan now, the one by one method, very time consuming. Time consuming. Using a scan um, makes things a lot easier. So this is just an example, guys, of a scan that you might want to consider. Our prudent performers search, looking for stochastics to have crossed from below 20 to above 20. Look at the parameters here of our prudent performer search. This is in the strategies prudent folder in the Unisearch tool. So if I go into the program, if I go into strategies prudent, search is prudent, prudent performers, there it is, there are the parameters. If I run that search as of right now, we're going to find NVIDIA at the top probably. No, okay. GNE, there's NVIDIA fourth down from the top. GNE, Supermicro, IBP, NVIDIA, Deckers, good stocks, right? Let's take a look at our indicators. Look at all the RVs, look at all the RSs. Price, for the most part, under their values. Strong earnings growth, good earnings per share. If they do pay a dividend, you got an earnings yield greater than dividend yield. Fantastic companies, right? Layering in now and merging fundamental valuation, which is pretty easy here, with the insights of technical analysis, I would look for an opportunity here to buy these stocks at a discount, or stocks like these at a discount. So I'm going to add another parameter here. I'm going to look for right now, I know they're fundamentally good companies, but I want to look for stochastics to have just crossed above 20 in the past couple of days. Okay, 14.3 slow, crossed above 20 in the past couple of days. I might get a different list of stocks here, but it's not going to change, only 3. Not going to change the fundamentals of the company. I didn't change anything to the fundamental parameters of the search, did I? I'm just looking for stocks at a bargain. So if we go graph these, okay, so Arch Capital, we looked at this one earlier, right? I said I didn't love the setup, but boy, you got great earnings per share. It's above our stop price. It's had nothing but a buy or hold since. Great retirement type stock. If I put on a stochastics oscillator, looks like and I know stochastics has just crossed from below 20 to above 20 recently there, because that's what we put in the search. So looking at this again, I do like this setup actually. Prices just recently pulled back off of a new high. So if you're looking at this stock as of right here, if this were the hard right edge, you're saying, okay, and the date is November 1st, and okay, great, market's moving higher. Should I buy this stock now? You could say yes if the stock continued to move higher, but it didn't. It broke down the next day. Even if you had stochastics crossing from below 20 to above 20, you never got follow through. So if November 1st is the hard right edge, you might see it's made a really strong move. I like a little bit of maybe a little bit of a pullback. The stock did pull back, and it kept going. Popped there for a little bit, but stochastics did not go below 20. Just recently went below 20 and is now moving off of that level again. Good buying opportunity, guys, here with ACGL. Fundamentally strong company. Recently had a short-term correction, short-term pullback. Still in an underlying uptrend. Still a fundamentally strong company. Good buying opportunity there. Same thing with this one. Look at this one. Love it. I love this setup. Price action here. Look, R&R. Let's do the analysis. $216 price, $330 value. Fantastic. RV 1.58. Very good. Excellent. It's on a 0 to 2 scale. It's a safe investment. They do pay a dividend, small, 0.75% dividend yield, but their earnings yield almost 15%. They're earning $32 a share, growing that at 29%. Great, whoops, great long-term investment. Price has struggled recently, hasn't it? So if you this is a long-term investment for you, and you're looking at the last 9 months, you're frustrated. Has the stock got a sell rating here? Just barely there once, and then it got a buy here. You could have bought it back. But you're in this stock most of this time, and you're pretty frustrated that you're not making any money in your long-term investment. But you got buying opportunities here. You got retracements off of support. You got stochastics that I don't know how many times here in the last 9 months had crossed above 20, crossed above 20, went below 20, crossed above 20, and just recently, once again, going from below 20 to above 20, good setup. CELH, my wife loves these drinks. Man, this is a good setup. How's the company? I don't know. Let's see. A little bit overvalued. All right. It's a newer company, I think. A little bit overvalued, but look at the long-term upside potential. 1.69 RV, 1.42 RS. They don't pay a dividend, but their earnings per share is 87 cents. 47% earnings growth rate. Look at that earnings per share over the last year. Okay? The stock has really gone nowhere over the last 5 months or so. But you had a number of opportunities here. Like, like that breakout or that retracement off of support. Look at what stochastics did. Went from below 20 to above 20. Then you get in these retests at this 49.72 zone. Another retracement off of it. Good setup. These scans are going to get you to where you want to be a lot faster than going through the one-by-one method. And just recently, that search, guys, prudent performers, off of the bottom, November 1st is when the primary wave first turned up, all the way to current. Prudent performers, with stochastics first crossing above 20, 10%, 9 winners, 1 loser. In just a couple of weeks, the VVC went up 7%, so we're beating the market, 9 winners and 1 loser. All this is the prudent performer search, looking for stochastics to cross from below 20 to above 20 when the market began to rise. Really big winners here, outperforming the market, which is the most important thing. And there's NVIDIA there on November 1st, where you had your buying opportunity. We talked about this one earlier. There was the support zone. There was stochastics crossing from below 20 to above 20. Good opportunity there recently for your entry. So you might be asking, this is fantastic. Oh, man, this is a lot. How can I take my game to the next level? You do have a choice. You could do nothing, of course. You could do it alone, maybe take bits and pieces of what I taught you today, or you can let us show you how. Okay? I always prefer, no matter what I'm trying to consume, is I want to do it the least painful way, right? Get me to my answers quickly. So that's why we put together this course called Uncovering Trends. It's a technical analysis course, but we also pay very close attention to fundamental valuation. And any indicator that we teach in this course, and there are a lot of them, always has the kind of prerequisite that we have to be applying it on fundamentally strong companies. So with the course, you get the complete course. It's 6 training modules. Guys, there are 60 plus lessons in this course. 6 training modules, videos, slides, all the graph resources and tutorials. You get 1 year access to all the material. This is a mastery class, so we will be doing mastery sessions live. There will be 6 of them. I'm sorry, 7 of them. 7 live mastery support sessions. You'll also get private dedicated email support as well. If you don't already have VectorVest 7 Premium, which is our real-time data, we're going to give you access to it for the duration of the course. This includes VectorVest Premium, includes Pro Trader searches and the auto timer. Pro Trader searches are very important. Okay, here is the agenda, if you will. Here are the modules. We start off kind of laying the foundation, doing a little bit more of what I talked about today, difference between fundamental and technical analysis. We then go into price and volume structure analysis, candlestick trading. Module 4 is a beast. This is where we teach you technical indicators. I think there are like 15 or 16 different technical indicators that we teach in this module. Very comprehensive. By the way, myself, Ron Wheeler, you guys know Ron from our URS coaching and our options trading. Ron Wheeler, Stan Heller did a lot of the core lessons, the pre-recorded lessons that you guys will see, and the late great Dr. David Paul. He was pictured in that education team slide that I had earlier, and I thought about it. I said, maybe about a week ago, I said, should we update that slide? Should we update that image? And I'm thinking, his voice can still be heard in so many different areas of VectorVest. He's part of the team. He'll always be part of the team. So he passed away recently, but he taught a lot of lessons in this course as well. So the lessons are, of course, pre-recorded, and then we go into trade management and psychology. Dr. David Paul, no better guy to teach that content, that topic there. Knows a lot about trade management and psychology. And then finally, the VectorVest Advantage. Okay, so this course is valued at $1,990. Okay, and this is what you get. But we do have an early bird rate available, $1,495. But for you guys here today, guys, I'm going to slash the price almost in half. $895. And what I'm going to do is I'm going to put the address that you guys see there at the bottom, www.vectorvest.com/trends. This $895 rate will only be available for a very short period of time. By the way, it's 100% money back guaranteed. Okay? If you come to the classes, again, we're going to be meeting live 7 times. You do any assignments that are given. You watch the recordings. If you're still not satisfied after the 7 weeks is up, we'll gladly give you a refund. Okay? So when are the live sessions? What if I miss one? If you miss one, they're recorded. They'll be uploaded to the university within 24 hours after we deliver them. You can actually go in there now, guys. If you once you register for the course, you go to vectorvest.com/trends. I put the link in the chat box so you can actually see it in there and click on it. When you register for the course, you're going to see a ton of content. Again, 60 plus lessons. You're going to see the old mastery sessions that the 4 of us did back then a couple of months ago. Those mastery support sessions that you guys will see in the course outline now, they will be replaced by the ones that we do on these dates. Okay? So John is asking a good question. So CELH trading at twice its value has an RV of 1.69. I don't understand. John, sometimes the market can overvalue a stock, right? The market can drive up a stock's price past its value. Okay? Generally, that'll happen in the short term. But based on the company's financial data and the strength fundamentally, that's how that RV indicator is above 1. Think of it this way. Value is current value. RV is future value. So even though a price of the stock right now could be trading above its value, again, because the market is driving that stock price and people are willing to pay a premium for it, doesn't mean that long-term price appreciation suffers. Okay? Now, if you looked at a stock whose price was above its value and the indicators were poor, I would stay away from that stock. If the fundamental indicators are strong, and boy, do they do a great job every quarter of reporting stronger and stronger earnings, that's going to drive future price. And again, market sentiment is going to really what's going to cause that stock to be trading at a premium right now. Okay? These sessions start at 1 p.m. They're all recorded. Here are the dates. Mastery session number 4, we had to break up in 2 parts because there are so many indicators to cover. So we broke them up into 2 parts. There's the agenda, guys. David says, Jerry, thank you, man. I appreciate that. Okay, so you're not buying cash secured puts. You're selling them, right? You're selling puts at a lower price. I don't know if you said that earlier, David. Buying, yes, you're selling. That's fine. So I thought you meant buying a put. And did you say that? How about, you just said, how about cash secured puts? Okay. So selling puts at support, or at at a support level. Sure. Sure. I have no problem with that. You're ensuring that you're going to buy it at the price that you want to buy it at. And if it's a good company, you're getting a nice bargain. That's fine as well. Okay. Nobody reminded me. All right, I'm going to put the slides, guys, in the handout section of the GoToMeeting control panel. Let me plop those in there now. Um, Let me know, guys. Let me know if you're in. If you're registering for this course, thinking about it, going to register later. The $895 rate will only be available for a very short period of time. Otherwise, it's going to revert back to the $1495 rate. I hate to see you pay more. $895, you get 6 modules, over 60 lessons, 7 mastery support sessions, the VectorVest program, if you don't already have it, live dedicated email support as well. So if you're in, just type in "I'm in" the chat box. I'd like to kind of welcome you guys aboard. We start in a couple of weeks. What did I say? First mastery session is December 6th. That is in about 3 weeks from now. 3 weeks, 2 weeks from tomorrow. Okay. All right. Thank you, David. All right, guys. Look forward to working with you. Really looking forward to this course. It's a great technical analysis course. This is how you kind of get yourselves over the hump with both your investing and your trading. Investing, you think about it, I'm going to buy a stock for a long term. I hope you're not thinking to yourself, I don't care what price I get, I'll just buy it now. I think it's going to go up 2x or 3x over the next couple of years. I'm just going to buy it now. Hope you don't think that way. Applying technical analysis to help pinpoint entries and maximize returns in the long term. Because if you can get a 10% discount or an 8% discount on a stock, that just is compounded over the years, and your returns are just that much greater. Okay, so really consider, guys, kind of meshing these two. It's a great course to help you do that. Again, my name is Jerry D'Ambrosio. I'm one of the instructors, so looking forward to working with you guys here in a couple of weeks. Take care, everybody. Have a great rest of your day.